any large deposit, and that is more than 50% of your gross monthly income, we have to source where it came from with documentation. If it was a transfer from another account, we need statements on that account to show where it came from. If it was money you had under your mattress at home, we suddenly can't use it. There's no way to track where that came from. The concern there is, did they go take out an unsecured loan someplace? I just had one where the customer took an advance on a credit card and deposited it into his bank account. We can't use those funds. They are not acceptable for a down payment on a house.
We're now joined by Cara, Reese, and Wendy Lewanovich, both vice presidents and senior mortgage lenders at the Equitable Bank. Combined, they have a lot of years of experience in mortgage lending. With potential home buyers who still have an existing home to sell, what are some of the options they can do to financing options that they can to not have to list their home before they buy a new home?
Well, we're seeing a lot of that coming through, obviously. Usually I'm asking them, first of all, if we can afford to keep both homes. That's huge. We have to run the numbers. But also, they tend to not remember that they need a down payment because they were going to use the proceeds from their sale. So then we look at options like maybe taking money from a 401k for that, taking a home equity loan, or we call it a bridge loan in that case. So it's a short-term home equity loan where we can pull some of the cash out that they need for the down payment. Gift, they can use gift funds from a family member. These are all things that will give them the minimal down payment at least, and then once their house is sold, they can apply those additional proceeds to their loan and recast their loan.
Is there a preferred option, do you think? What of any of those, if they, let's say I'm able to qualify for both, I have a lot of equity in my current home that I would assume would help in terms of being able to qualify for that type of loan?
If they have money in savings, that's the best option to go with. If we can avoid, a bridge loan is another loan. There's going to be some additional closing costs involved with doing that. So if they've got funds available for the down payment, if they can borrow from a 401k, we don't have to count that payment as a debt and qualifying either because they're paying themselves back. So those are the first options we would try to use. If we have to go to a bridge loan and they qualify with a bridge loan payment, though, we can certainly go that route. It's going to take a little more time because we have to have time to set that loan up and have those funds available. So
when you're getting into a pre-approval, what are some of the more typical hiccups that you're finding, especially when somebody's has an existing home and looking for a new home? What are the typical hiccups you find?
Well, I think what a lot of people are trying to do or hoping to do is to sell that house still in time to purchase the new house.
Okay.
And I think with the market changing a little bit, that's going to be a little bit more difficult. So I guess I would call that a hiccup because then they're not able to use the proceeds that they thought they would to put down on the other house.
So it's kind of living out in that limbo of I want to buy this home, I want to put an offer on the home, but I don't want to sell this, or I have to wait, or I have to put a contingency on. Is that
sometimes
kind of what you're talking about?
Their plan is to sell the house and they just hope that they'll sell it, but we have to look at it as one way or the other. If we're doing a pre-approval, are we doing it with your home sale or not? And if not, then we have to have all of those other details figured out, where the down payment's coming from. If you qualify, if they end up selling the house before they close on the new one and they've got those funds, great. It's easy for us to backtrack then and go that route, but we have to look at it as a worst case scenario.
What should a borrower or referral source expect out of their lender itself?
Good service, somebody who's going to be responsive to their questions. We're getting a lot of rush pre-approvals. People know they want to be looking for houses, but have procrastinated on getting the pre-approval done. So a lot of Saturday phone calls from people that need a pre-approval right now to go make an offer on a house. So you want a lender who's going to be responsive to that and be able to help you if that's what's needed. Ideally, we'd prefer that they do the pre-approval before that point, but sometimes that doesn't happen.
And we've been finding a lot of those rush approvals are because other lenders are not available on the weekends or in the evenings. So I guess, when thinking about the real estate agent, that's maybe something they should be asking too, is if their lender is going to be available if they do need that rush pre-approval.
What should that pre-approval look like when it goes out, when you type it up or whatever? You're not typing it up, but what should that pre-approval look like when it's presented to the borrower and or their realtor?
It's good for them to know that an underwriter has actually reviewed the file, that we've collected income and asset documentation. And I think most realtors in the area know that with Equitable Bank pre-approvals, that's normally the case, that we have fully underwritten the borrower and we know that they're good. And it's just a matter of the property and getting an appraisal if one's needed. But they need to make sure that the amount on the pre-approval is going to cover what they're looking at. I get a lot of requests. I did a pre-approval for someone and they're out looking at homes that are more than what they're pre-approved for. So they need to make sure that they're staying within the limits of their pre-approval, or if they're going to be looking higher, they need to get a new pre-approval.
Do you tend to look in when you see that somebody might qualify, their ratios are all in line? Obviously, you don't want to question people's budgets, but is that common to ask the question? Are you possibly, you could be approved for $450,000 or $500,000. Do you sure you only want a $250,000
Yeah.
mortgage? Or
A lot of times I ask them what they're comfortable with as far as a payment, because that's huge. As far as every different property, right, the real estate taxes are going to be different. So they could be, and that's another thing with the pre-approval letters, they have to pay attention to what that payment is on the letter, because if the taxes that we have them qualified for are $5,000 and this property has, $8,500 in property taxes, it's going to make a big difference with that payment. And a lot of times the borrower will say it's monthly payment more than it is purchase power, right? They need to be comfortable with that.
And when you get to that tax, when are you able to provide them, let's say that they found a home and you see that, was that really, do you leave enough room in when you're talking about that? Obviously, you're having that conversation, but do you share with them that it might depend on where you're buying that home?
Yeah. Yeah. If a customer, I usually will do my pre-approvals for the amount the customer asks for.
Sure.
And if that is putting them at their max based on the monthly payment, because when you do a pre-approval, we're really pre-approving you for the monthly payment amount, not a price, not a loan. There's variables, the property taxes, the interest rates. If the interest rates go up, you might not qualify for a $200,000 house anymore because that payment amount just went up. So if I have a customer who's at their max, I will tell them, you need to keep an eye on that payment amount. This is what I used for those property taxes, because if you go above that, you're not going to qualify. So that's just so that they know. And I think most realtors also understand, and a lot of them know how to run their own payment figures to make sure that if they're looking at a house with a buyer, that they're not going to be over.
Yeah. Go ahead.
I always tell people too to give me a call if they're wondering if they're going to qualify or there's some variable that's very different than what we had them approved for. I just have them call me and I run the numbers before they even write the offer. I'd rather be safe than sorry.
When you are talking to that the realtor itself, and you are being told that they're looking specifically at a home, and you're questioning whether that they're going to qualify for that dollar amount, can they simply say something? And I guess my question is going to be, can they simply say, well, I'm going to pay the taxes myself? You can't just disqualify. That doesn't come out of the payment. You're still doing a calculation based on monthly payment, regardless of whether they're...
Yeah, it doesn't matter who's paying them or how they're paying them. When we qualify, we have to take those property taxes, divide them by 12, and add them to the monthly payment.
So I get the pre-approval. I'm now I've found a home. I'm ready to. I got an accepted offer. What are some of the do's and don'ts to get you to that closing table as quickly as possible? What are some of the do's and don'ts that you
Do not go out and buy a car or all your furniture.
Don't
quit your
credit.
job.
Don't make large deposits without talking to us
Why?
first. Because all large deposits have to be documented. We are going to ask you for your last 2 months of bank statements. Any large deposit, and that is more than 50% of your gross monthly income, we have to source where it came from with documentation. If it was a transfer from another account, we need statements on that account to show where it came from. If it was money you had under your mattress at home, we suddenly can't use it. There's no way to track where that came from. The concern there is, did they go take out an unsecured loan someplace? I just had one where the customer took an advance on a credit card and deposited it into his bank account. We can't use those funds. They are not acceptable for a down payment on a house.
And is that going to count even against their debt too? Since he
Well, yeah. Yeah, because now we've got a higher credit card balance.
Why
as
would he
well.
do that?
He didn't ask. He just assumed. People don't know. They make assumptions and they do things and they don't know. So be honest with us.
Yeah.
Tell us what you're doing because we're going to find out.
Yeah.
And it's better that we know up front than 2 days before you're supposed to close.
Okay, so now I've got my pre-approval. You've already told me all I have basically with this pre-approval is I already should have had the documentation, but I'm not closing for maybe, for some reason the seller needs 90 days. Are you going to have to come back to me for more information, or is the information I already provided 90 days ago? Is that going to be okay?
Well, it just depends at
Yeah.
how old it was when you started your pre-approval, because
Okay.
typically the documents are good for 120 days. So we kind of have to watch, and same thing with that earnest money. If we're looking to see the earnest money clearing your account, a lot of times that might be a month, we might not have that month's bank statements. So then we're going to be asking for that. So it just depends on the dates that you started your pre-approval and the dates you're going to close if we're going to need anything updated.
Yep.
And one of the things you've talked about too, I believe, is that sometimes people come to us because the other lender or some other lender isn't open on nights and weekends. Have you run across any stories where customers come to us because whatever that pre-approval that they were presented originally from someone else is not strong enough to get the deal done? Does that occur?
Yeah, I've had quite a few realtors that they'll get pre-approval letters from online lenders and they know that a seller and the seller's realtor is going to see that and they're questionable. They don't know if there's a problem, are they going to be able to reach anybody to deal with it? So they a lot of times will send their buyers to us to get a pre-approval from a local lender, somebody that the realtors in this area are familiar with.
Okay. Any other situations where you've actually had somebody who had an accepted offer and then all of a sudden their financing fell apart and you had to maybe come to the rescue? Is that ever?
Sure. Yep. They've been with a different lender, maybe for their pre-approval. Maybe they ended up changing their program, and that lender doesn't do that type of loan. A lot like with non-warrantable condos and things like that, where they find that out at the last minute, and the lender that they were using doesn't have that product.
What is a non-warrantable condo?
It's basically just a condo that might still be under construction. They're still phasing. There's a lot of different reasons. There's a lot of rental units in it that may disqualify it from Fannie Mae and Freddie Mac, and we can do those types of loans because we have our portfolio.
So
lending.
those are options to where we can
Yep.
do, you can do other
little
types of
niche.
loans. Okay. So if for some reason maybe I've changed jobs or something like that, where I'm not in the same industry, are there opportunities for me to still buy a home, even though I'm still making, similar money, but I don't have this 2 years of history? Is that correct? I have to have 2 years of being
Employed.
employed.
And if you were a college student, that counts towards that. We can get your unofficial transcripts and put that towards it too. So if you're fresh out of college and just started a job, that's okay. But yeah, so we do Fannie Mae, Freddie Mac fixed rate loans, but we also offer portfolio loans that we keep in house. So if they don't fit those Fannie and Freddie guidelines, if it makes sense, our underwriters will look at it. And if it's something that we feel strongly is a good risk, we'll do them. So yeah, as long as it makes sense.
Are you seeing more with the inventory being so low? Are we seeing more opportunities potentially with construction, people wanting to build their own homes? And what does that look like? What are some of your suggestions for people who may want to build?
We're definitely seeing an influx of that because there are no houses out there to purchase. So a lot of people are looking at lots and then wanting to do, construction loan. We do have options for that, obviously, on our portfolio. So we're able to do the lot loans or a lot and construction loan. It really looks similar to a normal pre-approval process or a normal loan process. We still qualify them based on the same information. It's just a little bit more entailed with the builder and the plans and specs and cost breakdown, things like that. So
When they're interviewing a builder, or when they approach you and say, I want to get a pre-approval, I'm going to go be meeting with the builder, what suggestions do you have that you may share with them to say, these are the things you should be asking the builder in terms of what are the best practices or what are some of the cues that you can provide them? Obviously, I think we know who the reputable builders are and things of that nature, but what are some of the questions that your potential borrowers need to make sure they're asking?
Well, I mean, a lot of it comes down to just pricing, right? Because that's how we qualify people. So, when they're looking at the builder's spec or whatever they might be looking at, the costs might be very different once they get into picking their things out on the house. So they just have to make sure that, they know what their price range is or price point is and try to stay within that as far as qualifying. And that's even though construction is kind of hard to pre-qualify people on, I still think it's a good idea. So they know what they're looking at as far as costs on that construction end of it, because there are overruns and things like that where they're going to have maybe cash after closing and things like that. We kind of try to prepare them for.
Right. Well, because once that construction loan amount is set and we've closed on the construction loan so they can start building, we can't change that. So if they go over on something, they have to pay for that out of pocket during the process. So they need to be prepared for that.
And a lot of times people will put less down up front because of that. So instead of putting 20% down, maybe for the construction, they're only putting 15% down or 10% to keep that additional funds on hand for the overages.
And then there's MI assigned with that. I know sometimes MI gets a kind of a negative connotation that goes along with it. But what's the benefit of having MI, whether it's on a construction loan or just a general?
It allows you to buy a house without having to put 20% down. You don't have to have 20% down to buy a house. You will be required to pay PMI, private mortgage insurance, if you don't. It's risk-based pricing, so it's going to be based on how much you're putting down, what your loan amount is, what your credit scores are. It's really not
horrible.
No, the PMI rates have come down quite a bit in recent years. So it's surprising to see how inexpensive it can be, especially if you have good credit. And it's not forever. As soon as you've paid that balance down to 80% of the purchase price of the home, you can request to have it removed and it will fall off at 78%. So it's a small price to pay to not have to save up 20% to buy a house.
Or if you have 20%, maybe you can keep some to be able to go back and buy the furniture and all the things that you told. So versus putting all of your savings into the
draining
house,
your savings.
And then living off of credit. So what other suggestions do you have for people that might be looking to get pre-approved today?
Do it now.
Yeah. If you're even thinking about buying a house or looking at houses, get the pre-approval done first. You shouldn't even be looking at houses until you have a pre-approval, because the whole process will move so quickly. You will see a house come on the market, you'll go look at it that day, and if you like it, you're going to have to make an offer that day. So you don't have time at that point to try to put everything together and get a pre-approval. So if you're even considering, it's free. Once we do a pre-approval, they're good for 120 days. So just get it out of the way, get it done, and then you're free to look.
And what do I need to bring to have that pre-approval done? What do I need to have prepared to be able to?
It really depends on, your type of where your income comes from. So, if you're a W-2 employee, it's really just pay stubs, W-2s. We request bank statements or other asset statements from where you might be getting your down payment from. Self-employed is a different story. Obviously, then we're going to need tax returns, typically 2 years of self-employment showing on your tax returns. But other than that, it's a pretty simple process. I mean, we have an online application. They're able to upload documents right to their application, basically, for us. And then we put it into underwriting. So right now, it's a very fast process.
So I go in and put in the online application, and then I'm waiting for something to pop in, or am I going to hear from one of you first?
You'd hear from us. When we get the application, we will usually email you with the list of what we need and the instructions to upload your documents to our site. Once we have all your documents, we can usually get a pre-approval letter within 1 to 2 business days at the most. So.
And on weekends.
Yeah, mostly.
Thanks to Wendy and Cara for joining us on the Smart Start podcast, brought to you by the Equitable Bank. One of my favorite cliches over the past several years is in these uncertain times. Truth is, there's no certainty, and that surrounding yourself with people who communicate and provide you with the best information will temper some of that uncertainty. Our guests today certainly check those boxes. Remember, there are no problems, only solutions. I'm Tom Sattler, and thanks for joining us on the Smart Start podcast, brought to you by the Equitable Bank. Till next time.